On Tuesday, the 10th of October, the Minister for Finance, Michael McGrath, will deliver his annual budget. The Irish budget 2024 will have to strike the hardest of balancing acts in seeking to improve household finances without creating longer-term inflationary consequences for the Exchequer against the background of an upcoming general election in either late 2024 or early 2025. The Irish Exchequer has collected over 18.2 billion in income tax receipts to the end of July of this year, so the government is under pressure to deliver substantial tax savings. But given only 1.1 billion has been identified for taxation cuts, the opportunity for the Minister for Finance to make wholesale changes is very limited. In terms of expectations, Budget 2024 will have to include a number of once-off cost of living measures that support families, while seeking to continue to temper and balance that with both a stable policy and business outlook for corporates who are investing and doing business through Ireland. Bearing all this in mind, my tax colleagues have prepared a summary of what we might expect to be the main budget measures.
Many Irish businesses are finding it difficult to attract and retain key staff. In an effort to address this, there are likely to be enhancements to the KEEP scheme. This share option scheme, specifically designed for SMEs, is attractive in theory but doesn't work so well in practice. We also expect to see marginal improvements to both the EII scheme and the capital allowances regime for energy efficient equipment. Large corporate groups are already preparing for the new 15% tax rate, which will take effect next year. In order to demonstrate that Ireland is still competitive despite this, the Minister for Finance committed to a participation exemption for dividends by 2025. That will reduce the admin burden for this important cohort, which they welcome. However, more is needed. Therefore, we will see small, gradual improvements to tax incentives over the coming years, but little else in this budget.
There has been speculation that the VAT rate on the supply and construction of housing could be reduced from 13.5% to 9% to support the delivery of new homes, following changes in EU VAT law in 2022 that permitted this. The temporary reduction of the VAT rate on electricity and gas to 9%, which is due to end on the 31st of October this year, could be extended again due to ongoing cost of living pressures. Carbon taxes are expected to increase in accordance with the current trajectory set in 2020, meaning an additional €7.50 will be levied per tonne of CO2 emissions, coming into force on budget day for diesel and petrol, and from the 1st of May 2024 for all other fuels. However, it's likely that the government will put a hold on fully restoring the excise duty rates on petrol and diesel to help alleviate high fuel costs. These rates were due to be restored from the 31st of October this year, following a temporary cut in March 2022. We may see the introduction of measures providing long-term incentives to ensure that Ireland is well positioned to make the transition to net zero. No changes are expected to the current rates of stamp duty, and we are not expecting the announcement of any new property taxes, given the introduction of residential zoned land tax in Budget 2022 and vacant homes tax in Budget 2023, and the expected enactment of the land value sharing contribution mechanism.
On the personal tax side, it's anticipated that some measures to reduce income taxes will be introduced. Firstly, it is likely that either some of the thresholds at which USC is applied will be increased, or there will be a 0.5% cut to some rates of USC. We also expect an increase of between €1,000 and €1,500 to the cut-off point for the standard rate of income tax, which currently stands at €40,000. The Minister for Housing is seeking incentives for small landlords to retain and attract landlords in the rental market. However, any such incentives are likely to be insignificant. The rent tax credit is also likely to be increased, which will be of help to renters. The introduction of a third rate of income tax of 30% has been proposed, but it's unlikely to form part of this budget. On the capital taxes side, there have been calls for increases to the tax-free thresholds for gift and inheritance tax purposes in line with inflation, and a reduction to the headline rate of CGT. but it's unlikely that there will be any substantive changes.
For further information on Budget 2024, please refer to our budget highlights and insights on the website at www.ByrneWallace.com.